under the advanced trading strategies and concepts, it is time to move towards the piercing pattern. The piercing pattern is still a reversal pattern, so we are under the fourth chapter, the reversal patterns under the candlestick charting techniques. And but you probably noticed by now, when you're heading for each, let's say for each bullish pattern, there is an opposite bearish pattern under the Japanese candlestick charting techniques. Of course, this time it is no different. The piercing pattern, it is the opposite bullish situation of the previously showed dark cloud cover. The piercing pattern, it is a group of two candles, and it appears on a bearish market. So you are looking for this pattern when prices are falling. So you are having a bearish market, prices coming from the upside to the downside, and you're looking for such a reversal pattern. The first candle in this group, of course, out of this group of two candles, the first candle is a red one, followed by a strong green candle with a strong real body, and that should end higher. The second candle should end higher than 50% of the previous red candle's body, and there you go. You have the interpretation for its name, to pierce it. So the greater the degree of penetration, in the red candle's real body, the more likely it will become a bottom reversal. Now, if the penetration goes and exceeds the 100%, that will become a bullish engulfing, which is an even powerful reversal pattern, bottom reversal pattern than the piercing is. If you have a possible piercing pattern that pushes, let's say, less than 50% to the previous candle's body, then it is advisable for you to wait for confirmation, and that would mean you should wait for another candle to close above the highs of the piercing, and there you go. That will be a confirmation that the bottom, or a possible bottom, might be in place. For our purpose of illustrating here the patterns, this is a weekly chart, and a piercing pattern appears here. So let's take a shape and place it here, and let's say that this is being called, these two candles here are forming a piercing pattern. So piercing pattern, and this piercing pattern is being formed once again by two candles, one red candle and one green candle. The green candle's real body goes deep into the territory of the previous red candle, ideally higher than 50%. Now, if this would have been lower than 50%, it would have been advisable to wait for confirmation. In this case, it means to wait for the close of the next candle. This is a weekly chart, so wait for the confirmation on this weekly chart with a new candle, and then you might consider you have a possible bottom in place. You have to keep in mind that on such a pattern, the lows in the shadows area here are being considered support or any pullback. So you might have also a support when trying to position on the long side with this strategy. Well, this is only one example on the weekly chart, but we can go, for example. So remember, we are looking for a falling trend, like it is here. Another example, so we are looking for a falling trend, and then to have a red candle and a green one, and this is being called a piercing pattern. Bullish reversal pattern. If the second candle, the green one, would have let's say would have advanced higher than the real body, higher than the previous candle's real body, then this would have been called a bullish engulfing pattern, and it would have been an even more powerful retracement tool, powerful reversal pattern. Sorry. So when you're looking at the rising trend, you don't look for We don't look for piercing patterns, and let's try to look at the different time frames. So let's open file, new chart. Let's open now I don't know, the US dollar Swiss franc, and let's make a template, our template, and let's make it a daily chart. And on a daily chart we are looking for a falling trend. So for a falling trend, and on the falling trend we're looking for the piercing pattern. Not the cases in here, nothing in here, nothing here. For example, this might be the example I was looking for, in the sense that this is a possible piercing. This is a possible piercing pattern. But as you can see, the second candle pierces the previous real body of the previous candle, but not going to the 50% retracement. This is the 50% retracement. Now, in such a case, while this is still a piercing pattern, it might be advisable for you to wait for the close of the next candle, and this is the close of the next candle, in order to have confirmation that a possible reversal pattern is in place. As you can see, also the falling trend previously to this pattern is not that strong, not that big. Basically, we are part of an upper move to the upside, a stronger move to the upside. So this looks to be a correction, but anyways, a piercing pattern seems to be in place also in this case. Now, for the purpose of our analysis, let's open a new chart, file, new chart, and let's try to take a look at Australian dollar, US dollar, for example, on the 4-hour chart, template, our template, and remember we are looking for a move to the downside. This is a bullish engulfing, so this is not a piercing pattern, not a piercing here. This one seems to be a piercing pattern. And this piercing pattern has a small real body for the green candle, but if you will wait for confirmation for the closing of the next candle, then this piercing pattern is being confirmed. You have a support, a possible support area here for the move to the upside, and keep in mind that this is a reversal pattern. And with this pattern, we've ended the reversal patterns under the candlestick charting techniques. And we'll move on with the next recording. We'll move on the same Japanese candlestick charting techniques, but we'll move on towards the continuation patterns, and we will take a look at the windows. There is the Japanese interpretation of gaps. We'll take a look at the rising and falling three methods, a beautiful continuation pattern, and we'll take a look at the intriguing separating lines. Why intriguing? Because they are rare, especially rare on the currency market, because they involve gaps. They are more common on the equities. I don't think that I even have an example for separating lines on the currency markets. But I will try to draw you one, okay, using the paint program on the computer, because maybe you are trading equities, and you should know that on the equity market such a pattern is extremely common. So until next time, stay safe on the market.